Check. What is happening? Let me just verify real quick. Make sure we are good to go before I get into it. Cool. I just had to make sure all my volumes is good because it would be a disaster if I were to do all this and you guys couldn't hear a thing. But as you guys are knowing, as you guys may know, based off of the title, talking about mortgages today and really what's going on there because I'm not seeing enough people take advantage of what's happening in the space, especially when we talk about mortgages, like mortgage rates being high and everyone wanting them to be low again, like they were during, the 2020, 2021 phase. So I don't think we'll get to that level again, but unfortunately, you got to live with what you get. And so we're going to talk about mortgages and just really kind of go on the landscape of what's happening, what you can do to position yourself. Just let me get myself situated. I don't think I need that. All right, first things first, I have to go to Mortgage News Daily to see what the current 30-year fix is, the 15-year. Right, that's a website that I would encourage everybody to go check out, especially if you're in the market and trying to purchase. You should be on that website. Maybe not religiously, but you should be on that website quite often, especially if you're banking everything on the interest rate. So at this current moment, as we're talking about interest rates, 30-year fix is at 6.86. 15-year fix is at 6.27%. 30-year fix for FHA is at 6.35. And then VA for 30-year fix is 6.37. So you write those numbers down, you do what you got to do with them. But that's what it is. And I want to share that with you just so you kind of know where we're currently at, right? Because a lot of conversation we're going to have today is what we're even talking about something that can impact and change everything in terms of real estate. But right now, of course, as you know, inflation is something that the federal government, or the feds, I should say, is really trying to regulate and handle. But we'll see how that really turns out because I think it was back in 2020, it was all transitory, right? Until everything wasn't. And then we have market turmoil, which is all based around tariffs. So, of course, comes back into the conversation because it is causing a lot of chaos. So we'll see how all that really smooths itself out. But right now, I know plenty of people who are getting below market rates. So everything I just mentioned in terms of those interest rate, I know people who are getting below that on a regular basis, and that's because they're prioritizing. Maybe they're buying their rate down with their own cash, or maybe the seller's cash, or at least with the seller's proceeds to the table, or they're looking at new construction. Something I've preached several times on this live, on this channel, on my videos. I've been telling it, and I'm going to continue to scream it until everyone actually does something, right? Or at least until the people that want to do something do it. Because it's an opportunity that I think a lot of people are missing out on. But let's go ahead and share with you what I have to share. Duh. Of course, let's add this to the stage. So maybe if I put in presenting mode, it will look a little bit nicer, wouldn't it? So I came up with this, and it's all came about because I was speaking to a buddy of mine. He was like, "Yeah, I want to update my live streams," and he wants to make it a little bit better in terms of just kind of giving more value. And I was like, "Oh, that's actually a pretty good idea. Do a slideshow." And honestly, with the way that my live streams have been going, I have to figure out what's going on and why does this get so laggy sometimes. But maybe you guys don't experience it, but it's painful on my end. But as I mentioned, these are kind of what I already talked about, right? I kind of gave you I gave you the 30-year, 15. I gave you the 30-year fix for FHA and VA. But overall, right, we're looking at 6.86 as far as the 30-year fix, just in general. This isn't specifically for VA or FHA. In fact, FHA and VA were a little bit lower just based off of the numbers. But you can see here, right, 2021, of course, we all want those interest rates, but I don't think it's going to come back anytime soon. And if it does, I think there's going to be a lot of people that actually try to purchase. And if that happens, then prices are just going to shoot right through the roof again. And that's not what everybody wants, especially in a time where prices are already as high as they are. And a lot of people actually are not in a position or don't want to be in position to purchase at this current moment. So I actually have an affordability map that I'll share with you guys a little later and where we could go ahead and go over that. But I want you to really pay attention to what you see there, which says March 2025. There, the interest rate average just in March at 6.45. So again, if you're not really paying attention to the climate and what's really happening, you're gonna miss out on these opportunities to have a little bit of a lower rate, right? I don't think it's that much of a difference from where we're at right now, but that can make a little dent, especially if you start to buy down your rate and you start to get creative, and or maybe the builder at the new construction site is starting to chip in, right? They'll That could be a big dent eventually. And when I say buy down your rate, essentially, I'll talk about that. I'll talk about it. But people put extra money essentially to lower that rate, and that's something that you actually can do, right? So keep your eyes out on what's really happening. And again, go to Mortgage News Daily if you really, really, really want to know what's going on. Because even I forgot, it was maybe a week ago where we really just experienced lower rates with when the whole tariff, I don't know if you guys are paying attention to it, but the whole tariff thing about a week or two ago, rates shot down a lot. And those individuals actually speaking, because I was speaking to a lender and he mentioned to me, he says, man, if those rates didn't come down to where they did, I probably would have lost that opportunity to help those individuals get a home. But that's the thing I'm talking about when mortgage, how they, at least now, it's very, very, very volatile, right? So it's hard to really time anything. And that's why I think if you're trying to time this market, God bless you. But I would highly, highly encourage, if you're really interested in getting into the market and purchasing a home, this is not the time to time it. This is the time to just be ready so that you can go ahead and move forward with. In fact, I would even encourage you to, have already a lender that you know that you want to move forward with. That way, when you're ready, you can start that conversation and move forward. If you're not quite there yet, maybe it's the time to get ready, because again, when interest rate went down about a week or two ago, a lot of people, right, got into the market. A lot. A lot more, just because they saw it go down a little bit more. They probably thought it was going to go down lower. But the only people that can really take advantage of those situations are people who are under contract on a home, or those that already have an application, already have a pre-approval, and they could tell the lender, hey, lock in that rate. That's going to be a key thing, right? So you definitely want to know that you can lock in your rate. You just have to have the lender be able to do it and to let them know to do it, because if you don't tell them, unfortunately, they won't do it. I had to learn the hard way that on that one. Thankfully, nothing bad came out of it, but if you don't tell them, they don't do it, and it's unfortunate because it's like, man, why don't you just lock it? Like, you're charging me for it anyways. But let's go ahead and share my screen again. Sorry for that tangent, but this is essentially, maybe I can move this guy because I see that I am, no. But this is the stuff that can impact mortgage rates on a daily basis. And I say daily because that's literally what everybody is going through right now. Federal Reserve, as you can see, so whenever they make their decisions about what Fed rates are going to be, that directly does not impact mortgage rates, but it does impact the cost of borrowing, which in retrospect impacts mortgage rates. So I think their next meeting is in May. So we'll see what they do, if they keep it there, or maybe they decrease it or increase it, whatever they do. Just know if they increase it, mortgage rates are going to be a little bit more elevated than where they're at right now. If they decrease it, it may come down a little bit more. But we shall see. We shall see. We shall see. Um, where's my water? Inflation is another rate that definitely, I'm sure everybody, it's a hot topic, it's a hot name. So inflation definitely does play a big factor because, of course, if the Feds, and we're talking about this, right? If the Feds don't have the inflation that they want, what happens is they essentially increase, right, the interest rate, or at least their interest rate. Brother, why would you do that right now? Unfortunately, I can't take that. So if inflation does not calm itself down, yeah, higher interest rates are always going to be a thing right now. Economic growth, that's more of consumer sentiment. So how does the consumer really feel? I really don't see that as being that big of a factor at this current moment. Only big factor I could really see out of it is if economic growth is bad, that means probably stock market is doing bad, and if stock market is doing bad, then not a lot of people are going to buy houses just because, surprisingly, a lot of people, at least it's surprisingly to me, may not be for you. A lot of people use the stock market to then take that money and make a down payment on it. So if you're not in the stock market already, then this is not financial advice. I would just encourage you to look into it a little bit more because if a lot of people are using their stocks to make purchases on down payments or even closing costs or whatever the case may be, that means there's money to be made there. Now, I'm just going to say that. And then the housing market, of course, supply and demand. Right now, we're all experiencing supply being tremendously constrained in certain areas, not everywhere. If you tap into the stream before you know what areas, I think the last stream, I don't remember exactly where I talked about that, but in the last stream in itself, I actually show what areas are at 2019 inventory levels. So that was pretty cool to see that, right? So that everybody knows exactly what's going on there. And so why do I have this there? Let me do this then. Because I want to show you this. Oh, I don't want to show you that just quite yet. So here's kind of what happened, right? I know I talked about it, but I didn't necessarily go over it in itself. But this is essentially what happened after tariffs were mentioned, right? Mortgage rates went over 7%. And it's all in the bond markets, unfortunately. But I am not going to go over this. I think I'm just going to go over this one piece here. Where is it? I can't find it right now. I'm having a brain fart, actually. What did I actually want to discuss just now? Who cares? But I really wanted to show you that I at least discussed mortgage rates about a week or two ago. Again, they went down and then they got smacked really quickly. But this is not really sharing with me anything that I really want. So we're just gonna go ahead and pull back our slide. So let's understand the different type of mortgages that are out there. If you don't know, all right, fixed rate is essentially when your mortgage doesn't really change, right? The principal I'm speaking of is when your principal and your interest don't change. Taxes, insurance, HOAs, homeowners insurance, those are all a different story, right? We're not talking about any of those today. But if we talk about fixed rates, that's something that, as you can see, predictable payments with locked for the entire term, unless if you decide to refinance and do some other things there, then great. Then that obviously is going to change. The thing that I would say that a lot of people are wary of, or at least they want to stay clear of, is the adjustable rates. adjustable mortgage. And I say they're only wary or want to stay aware of because maybe their family shared a story of how they had a variable adjustable rate, and unfortunately they may have gotten a payment one month and the next month it was an entirely different payment and they were not ready for that, right? So that's what the adjustable rate is really going to include. The only one thing I would say about it, a lot of people may gear towards it because it may have like a lower interest rate, right? So this is where we're going to actually talk a little bit more about looking at interest rates and understanding it and the APR and all that good stuff. So you are well equipped, right? When speaking with the lender, what exactly to get out of it. But if you're not financially savvy, I would say, hey, your best bet is to try to get a fixed rate just so you know you're good. And if it does change, you can kind of anticipate it a little bit, and it's not going to change, a couple $100 or whatever the case is. Then we have the government backed loans, so your FHA, your VA, your USDA. Your FHA is going to require, I probably shouldn't jump the gun, but they all have a down payment. Well, no, FHA is the only one that has a down payment. That's going to be 3.5%. So I'm jumping the gun because I know we're going to talk about that a little bit later. But VA, if you are a veteran, salute. Thank you for your services, by the way. If you are looking at a USDA, right? So VA and USDA, they don't actually require any down payment, which is beautiful, isn't it? To hear such a thing. But with the USDA, it's something that I do want to make real clear is my bad. With the USDA, I want to make clear is it has to be in a rural area and it does have income restrictions to it. So you can't just go anywhere and get a USDA loan and just qualify for it. At least a home won't qualify for it. And then there's jumbo loans, but people in California, New York, I think are the only two markets that really are utilizing that the most. And I think one question I do get a lot, especially when it comes to variable rates or even adjustable rates, is it a good time to use it now, especially now that mortgage rates are pretty high? I personally would say, hey, stay clear of it if it's your first home. If you're a little bit more savvier, then you can take advantage of it, because one thing that they do say, and this is not financial advice, but you take it as you please. One thing that they do say, the people all the way in the back, they mention if rates are already high, how much higher can they actually go, right? That's something that we all don't really know. But let's put things in perspective real quick. What's the likelihood of it going up, right? If especially in the time that we're in now, where rates are high, not a lot of people are like really fond upon them. So if they go any higher, then that means less people. That's not good in itself. So there's like essentially it's an invisible cap. So you can take that how you please, but just know there is of course very much sustainable risk that can come along with taking adjustable rate, and if things hit the fan, then woof, you're gonna be a part of it. But that is something that I just wanted to share with you, just so you know, because I do get that question a lot. I say, the adjustable rate is lower. It's like, yeah, but do you want to be surprised or do you want to know? And that's the best way to put it. Knowing is fixed, being surprised is your adjustable. So here are some of the things that a lender is going to look at to make sure to qualify you, and also see what your interest rate is going to be. So interest rate is not just based on what the market is giving, right? It's based off of other variables as well. Your income, credit, your debt to income. I think those are only the real three that I would say. So here you can kind of read there what it states. But as I mentioned to everyone, especially if you're waiting, now is the time to really stack cash and just work on your credit, clean your credit up in any way that you possibly can to improve your scores, because the better your score is, the better rate you essentially get. So, right, you get rewarded for your good hard work that you essentially put in. And as I mentioned, down payment, right? So your down payment is another factor to it in terms of your interest rate in itself. So as I mentioned, your FHA is going to require, you can see it right over here. Your FHA is going to require a 3.5 down, whereas your conventional is 3 through 5. But I would say the conventional, although that probably looks really good, where you can get, oh my God, I could put down 3%. It's less than FHA. Yes, but you have to have really, really great credit and a really low DTI, debt to income. So keep that in mind, right? Keep it in mind. Most people that I see do conventional, though, I do honestly see them do more 10%. The only individuals that I really do see do 20% are the people that want to avoid private mortgage insurance. Which, fun fact, if you have a conventional and you have private mortgage insurance because you put down less than 20%, it finds its way off of that mortgage once you are in that. I believe it's you have to have at least 20% of equity into that property, then it finds its way off. However, if you have FHA and you have a private mortgage insurance, you have to refinance in order for you to get that out of there. So there's perks to either one of them, right? It all depends on what you decide to move forward with. But to say that you have to put 20% down, those days are gone. I don't know why people still think that. Had someone the other day tell me, "Yeah, I want to put 20% down on property," and I was like, "Well, why are you going to put 20% down?" Literally to avoid PMI. And I was like, okay, well, how are your funds in just general? Like, are you depleting everything? It was like, no, not everything, but we're get close to it. I said, well, maybe we take advantage of these new builders, right? And see what they have to offer before you go ahead and just throw 20% down when you don't necessarily have to. Right? Maybe you do 10% and just, hold on to the other 10% and get a conventional so that way it offsets itself. It's all about getting creative. But another thing that a lot of people do not know about is gifts. So I will say gifts you do need to have, that has to be sourceable. And that's the only thing I say to everyone. And a lot of people do get tripped up on that, is when those funds cannot be sourced, you will not have a fully funded loan. And so this is what I'm referring to. Gifts, talking about down payment. So you can't, the only gift you can get is for your down payment. Like, let's say a seller gives you closing costs, that's actually going to, or at least the seller is just giving you some sort of concessions that it can only be really applied to your closing costs. They're always, as a lender, they're always going to look for you and say, hey, where is the down payment? So if you necessarily are like tight right now or don't really have it, you can also get gifted, right? That's something that you see a lot. And then last but not least, the down payment assistance. I don't see it get used enough. And there's down payment assistance at state level, as you can see, state, local, even some banks are offering it. So it's all about just knowing what's really going on in your specific area. But they're out there. If you guys do at this point in time have any questions, or maybe you're on the replay, right? Let me know what your questions are in the comments below, and I'll definitely get back to them as quickly as I possibly can. But let's go ahead and go over the next one. So here, shopping for the best rate. Before we do that, there's a few things that I actually want to discuss with you. And I just have to find that screen because I really want you to understand mortgages before we really start talking about shopping the rate, right? How are you going to shop something if you don't know what to look for or look at, right? And so I really want to show you this here. And I'm going to show you several different ones because it's important that you see. Let me zoom in. It's important that you see what it is I'm talking about so you can go ahead and reference it on your own time. Or just reach out to me and just say, hey, what do you think? And, or I can connect you to someone that I know will take advantage of you. But they're out there. And so you can see the APR, right? And the APR is always going to be more than your rate because that's also including the lender's fees, everything that goes into actually buying the home in itself. So that's always going to be that's always going to be higher, but I would pay more attention to this rate right here. So you can see here, this is the payment, right? But in small print, I don't know if you can see it. It says fees and points. If I just press that little, information icon, right? points are point. It's like 0.856. So what essentially that is stating, right? And there's no lender fees on this one, so those that's probably going to go up. There's points on this one, which means they bought down that rate, right? And they're just going to essentially charge you. So that's what that is. Let's go ahead and take a look at another one, right? So this rate would really be 7 point, let's see, my math is good right now, 7.2 something, or 7.3, closer to 7.3, if there's no points being bought down, right? Same thing goes for this one, right? So, and the reason why I want to show you this, I'm going to show you several different ones because I want you to be able to spot out the difference. I almost I almost got screwed over, even in my time, of someone trying to literally give me a ton of points. I'm like, I don't need points, right? Why are we buying down rates for? What are we actually doing? So understand what you're actually getting. Points and fees is a big one, right? So here, let's see, right? Lender's fee is 700 and they're charging you 2,317 to buy down the rate 0.7. And so if you're trying to strategize and buy down that rate, what you can do is essentially whatever the purchase price is of that home, right? Whatever, at least it's hard to say because whatever price point you're looking at, if you're trying to buy down that rate, you have to immediately consider 1% of that purchase price. So 300,000, 3,000 will buy down that rate a little bit. So we have another one, right? So you're going to see it. I want to be able to show you one that has nothing so you can even see what the rate is going to be. I don't know if I have that one for sure, but let's see here. Right? So again, points, 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 points. Understand what, and if you want, be like, where are these points going, right? Definitely, pose that question. Don't just get applied points just because sometimes you may not even need it, right? And that's the part where I'm like, man, only if everybody knew exactly what to look for, then they'll know exactly how to navigate these situations and not get in the jam and be so far into the process where we're talking you're already in a contract and now you got a bunch of points being applied and maybe even a little bit more points. So don't find yourself in this situation, please, please, please. Let's see, I have another one, right? And it's unfortunate that this is what they literally are showing you. And they're only showing this because that rate, right? Each and every single one of these rates. They know people don't want 7% interest rates. They know it. So then why would they show you that on their own website? But I hope you got the gist. I mean, at this point in time, if you have a question about anything that I'm showing here not making sense, or maybe specifically you want to know a little bit more about how to look at mortgages and know to not be screwed over, then a good thing I will definitely say is if you go on Reddit, a lot of people, what they do, surprisingly, they'll share their, what's it called, their loan estimate, or even maybe even their, what's it called, the closing disclosure, to show you what their rate is actually. So that's another way to actually take a look at them to kind of get prepped up to see, when you get those documents, or even to take a look and see what other people are getting. Of course, it's all going to be very different, right? So don't use it for verbatim, right? Just give yourself an idea. But this is why I didn't want to talk about this just quite yet, because you can't necessarily you can't necessarily shop for the best rate without knowing what to look for, right? And so I just kind of share with you what exactly you could go ahead and look for. Yeah, you heard your Van Parks. Hit that like button, y'all. I'm giving y'all gems for the people that actually show up and perform, right? I love it when the room is dead because this is when I probably drop the most amount of gems. Unfortunately, right? When no one's here, that's when you actually in the gym doing that as much as you possibly can, getting your reps up. But back to what I want to talk. If you're going to shop, make sure you are not shopping just based off of interest rate. Understand everything that goes into it, right? If they're charging you points, how much points, right? Do they have to charge you points in order to qualify you? Okay, these are the things that I would definitely say that keep your mind open to, because you will find real soon, as you guys just saw, right? A bunch of people are probably going to be walking into the expectation of, oh, I'm getting charged a fee. And that's just what it is. So after you do that, you go shop and you go find that lender that you want to work with. Go ahead and get pre-approved. You can try to negotiate fees. I mean, the only fees that you're really going to negotiate is, and they're probably not going to negotiate too much on the lender fees unless if they're trying to give you a credit on anything. That's possible. A lot of lenders, what they'll do, especially now, they're offering you, hey, if you use me, I'll do this for you, kind of thing. I'll pay for your. I know I've seen they'll pay for your appraisal. They'll maybe even pay for your credit check, right? So they'll add these little different incentives in, so you could try to negotiate those things. And then, as I mentioned, understand your APR, but your APR it's really based off of the when you first purchase, not so much of when you after you purchase. And so we can talk about budgeting. I think it's something that we should talk about. But instead of talking about this specifically, I'll just go to a mortgage calculator, which I think everybody should, but definitely you could take a look at this first. So this is essentially what you would bring in, right? This is the whole 30% rule, or at least this is here saying 28% of how much of your income should be based on just your mortgage. Is this happening now? Absolutely not. Reason why I say absolutely not is because I know a lot of people who are above their threshold just because home prices aren't in a very favorable spot, let's just say. But I like to come to this calculator, bank rate. Go to it whenever you get a chance and just literally have fun with it. In fact, I will actually post it in the comments so that you can literally go to the website and enjoy it. So let's do this. I know what's a zip code that's in California. I just need one zip code. Just give me one. So I'm going to do this with you, right? This is exactly what you should do. Let's use this one. I don't even know what area that is. So if it's a great area, great. If it's a bad one, bad. 90978. Okay. The reason why you want all of this to really be true, because this is going to calculate essentially your taxes. So let's do 3.5, right? So if you're looking at, let's do a 350 home. If you're doing a 350 home, 3.5, there's your down payment, right? We saw a lot of interest rates of 6s today. Let's just do the 6.86 that I saw in the, right? So if we did a down payment, you're looking at 12,000. Interest rate, I just used kind of what is base, but that of course is not going to be true. It's all going to be based off of what your variables, your income, your debt to income, and of course your credit. And then this is property taxes. So I don't know this area, which is not helpful. But let's just say it stays there, right? I'm not gonna even touch it. Let's just say homeowners insurance is definitely a thing. I am going to add PMI, and I'm just gonna put $80 just randomly, right? I don't know how essentially you can actually calculate PMI. There's definitely a method. I want to say it's. Nah, I'm not gonna even say it because I don't know off the top of my head. But if I update this, boom, there goes, right? There goes what your monthly mortgage is, right? I get this question a lot. What's my monthly mortgage going to be? You should know this before even speaking to a lender, right? You should have already budgeted this. You should have already discussed this amongst yourself. Hey, what is it that you're willing to? Right? This can also give you an idea of how much home can you actually afford. Right? If you want to do the reverse of it, and okay, let's say you wanted to, it's not going to be this one. Let's see if I can pull up another one. But now let's go ahead and do 10%. And just so you can see, right? So right now the payment is 2,500. just about 26. I didn't change anything else, but just your down payment, which means you're putting it up more, and your payment came down literally probably 100 and some bucks, about 150. Let's just say just about. Right, so you can see the amount of money you put up. It does help, but is it one of those things where it's the end of the world? My opinion, no. Because the math that I would do at this point in time is, all right, if I have to put down 35,000 in comparison to 12,000 to only save about 150 or so, how long is that going to take me to get my money back? And that's the math that I would definitely recommend doing if you're kind of trying to figure out where exactly are you going to be. So what I'm looking for now is how much home can you afford? All right, so here's another calculator. All right, so if you don't want to do what I just did and kind of just play with the mortgage calculator, what you can do is come here to literally these home affordability calculators are everywhere. And so this is where you'll just enter literally your specific income, your debts, your credit score, what the interest rate is. Are you actually entering credit score? No, they don't even care for credit score here. But just know that will play a factor in terms of at least your down payment. So you live with that the way you want to live with it. I could do another area. Let's see where most people are moving to. At least millennials, you know? Where are the millennials moving to? Oh, yeah. We got North Carolina on the map. I already knew that. Orlando. I feel like these are like the hotspots. Just doesn't matter like what state or at least where we're at. 11% millennials are moving to Atlanta. Oh, Sandy Springs. Interesting. Even Savannah, Georgia. What's this? Athens. This is Durham, 9%. That's definitely including Raleigh in that mix. All right, but let's go. I just did California. Let's go ahead and let's do DC. All right, so now let's get a zip code for DC. Actually, I don't know if this is going to be 2005. All right, so just make sure if you're doing this for yourself that you do update this. I wonder if it's going to pull the taxes, and it's not, which is unfortunate. So if it doesn't pull taxes, this is when I would say go to Zillow, 2005 zip code. And I'm doing this live for you just because you can't say no. You don't know how to do it. All right. So, geez, man, something like this, you can easily get here for like six 600. Oh man, shout out to everybody living in DC. I hope y'all doing great. Because woo. But anyways, let's pull this one up intentionally. Everybody loved $1 million properties. So let's go ahead and find what the taxes are. Just to give you an idea, right? Because on that bank rate calculator, it wasn't updating. All right, so it looks like mm, 18 grand is crazy. Brother. All right, so we got to do some math here. So 18 grand, let's see. 18,372. I'm dividing that by 12 just so I can understand how much every month is required. And I got 15. I got 15. All right, so keep in mind. Let's actually bump that up. Like, let's see. Let's see what this person is paying on their mortgage. Let's do that. They're 2.1 is what they listed their home for. So if somebody were to buy that, let's see how much they're gonna pay. Let's just say they do the 20% down. Oh, my property taxes went up. Interesting. How did the property tax go up on its own? I don't know that. That actually caught me off guard. But based off of the taxes I saw, that's not even right. So paying almost, geez, 12 grand for a home. And that's with 20% down. So a home like this, you're not gonna be able to go. I believe FHA has their limit. I don't think you're gonna be able to do FHA on this one. So you're really looking at the jumbo at that point, right? What we talked about a little bit earlier. You're looking at your jumbo loans. But go get the taxes, do this, have fun, play with these calculators so that you know exactly what your monthly payment is going to be. A lot of times I get these questions, hey, what's my monthly payment? It's like, please know what your monthly payment is before speaking to anyone. Because you let a lender leave it up to a lender. They're gonna give you a payment, and it's probably gonna be a payment that you just don't like. So don't say I didn't warn you. But it's one of those things that I always try to encourage people to go get at least pre-approved and know what your limit is, so you know now you can relay that message to the lenders like I don't want to surpass this amount. So then they'll give you a pre-approved for that amount, and you know you're secured at that point. But if you don't want to listen to me, do as you please. Just don't say I didn't warn you. Okay, I think I can go back to my. Here now. Am I back? Am I back? Back. I'm getting kind of hungry now. Okay, I think I'm good. Let me know if I'm not good. I went through the matrix real quick. Looks like I'm still going through it too. Sorry. I really have to fix this thing. This is like an ongoing issue. However, let's say something that a strategy I do know that I don't hear it as much as I used to, which was date the rate, marry the house, which is essentially saying, hey, you can always refinance. So with refinancing, just know it is not guaranteed, it is not promised. So please, if you're going to live by that or at least operate with that, just be careful and be cautious. Because if rates don't come down to a level that you're ready at, then you'll be kind of paying that payment for the life of the loan. So, and again, if you're going to even consider and think about refinancing, then you want to remember that your income, your credit, your debt to income, all that stuff still is going to be considered again, and you're going to have closing costs to be able to refinance. Sure, you could roll it into a loan, but those are things to definitely keep in mind, right? Because again, a lot of people just say, marry the house, date the rate, but they don't tell you exactly what's going to come about when you're ready to refinance. So have that, understand that too. So besides that, I think I'm going to go into a few predictions, right? So we're going to read A few predictions that were made about mortgage rates. Where are they gonna go? I'm not gonna sit here and try to tell you. I'm an expert in telling you where mortgage rates are gonna go because I cannot tell the future. Can't even tell my own future. You want me to tell you where mortgage rates is gonna go? You gotta be out of your mind. All I know is it's not gonna see 2021 or 2020 levels. You remember when I showed you earlier that 3%? Yeah. I'm sorry to break it to you, but those times are gone. Gone, gone, gone. But we have here, so we're just gonna read through these real quickly, just so you can see, right? These are all predictions. No one's right, no one's wrong, but these are always sometimes good to see, just to see what the common ground is. So we have someone who I don't know who this person is. National Association of Home Builders. Who is it? Catherine Go. Okay, so she's stating they're forecasting mortgage rates to be around 6.5 by the end of the year, only falling below a 6 level by the end of 2026. Wow. So we're she's stating in the range of 6.5 to 6 all the way through next year. So 2026. The National Association of Realtors are saying rates will average between 6.4 for 2025 and 6.1 2026. It looks like rates are going to come down a little bit next year. So I don't know if that's in alignment with a lot of your plans, but Fannie Mae actually just revised their mortgage rate forecast downward despite uncertainty. Oh, wow. So they expect the 30-year fixed mortgage to average in 6.5 in 2025 and then 6.2 in 2026. Looks like a National Association of Realtors and Fannie Mae are like literally saying the same exact thing. Freddie Mac is saying they didn't actually give a number. Smart that they didn't give a number. Right. So by me going through these, you guys can see the common ground, right? It doesn't look like rates are going to go anything below 6. If it goes below 6, oh man, yeah, everything. Something broke in a bad way. Let's see, Mortgage Bankers Associations, they are stating 30-year fixed mortgages to average 6.8 in the second quarter of 2025. Okay, which that's where we're at right now. Then they're expecting it to edge down to 6.7 in the third quarter, ending the year at 6.5. Wow, so they actually walked you down each step of the way, kind of giving you that idea. We have Bok Financial. Bok Financial. He expects this guy, Michael Merritt, expects rates to stay in high 6 to low 7s over the next few months. And yeah, I could go each and over every single one of them, but as you guys can see, I don't think we're gonna go below 6 at all. Just based off of what these guys are saying. It's not my predictions, it's theirs. So if that's the case, something I'll share with you because again, I don't see enough people take advantage of this, which is the assistance that come with it. Right? Maybe the down payment is an issue, or maybe your closing cost is an issue, or maybe it's the interest rate. Right? Pairing yourself up with some sort of down payment assistance or some program, someone sent it is what you need to be looking for right now. So I'm going to do you a favor. I'm going to save you a little bit of time. I'm going to share with you what I actually came across. If you don't know about this, now is the time to tune in and really take notes or just go to this website and read everything that you possibly can read because Bank of America is still giving out money. And I say money. I don't this is a grant. So yeah, they're giving free money. It's not everything's free. They'll probably get you somehow, some way, but they're giving away money to help you purchase your home, which is going to help you up to 17,500, right? So a lot of times this is stuff that is going to help you with your closing costs and your down payment, as you can see here, right? When combining those two. And if we use FHA, we're looking at 3.5 and then an additional 3% of the purchase price if you have closing costs. But let's just say you get the seller to contribute to that. Ooh, you might walk out of there with a check. You might. You might. But it states it here, right? I don't know if you can see that actually. My bad. These are grants, not a loan. So they do not need to be repaid. That's beautiful. That's actually what you want to really find. You want to find grants, not someone that's just going to put a secondary loan on your home. And that's something that they're going to hold over your head and dangle it if you don't use it, if you don't fall in line with their requirements. So, but that's one of the that down payments that I did come across. Again, these things are everywhere. You guys can kind of see it here. Go to this website. I'll drop it in the link. Why is it saying that? I'll drop it in the link so that you can go ahead and get that. Because yeah, we gonna share that one. You talking about free money? What? What? And here's another article I saw. Getting a $200,000 down payment is crazy to me. Why don't want to give me the link? Don't worry, I'll share it. Give me 1 second. Once it allows me to grab it. There we go. So it's in the comments. What type of link is this? Bro. Anywho. Did it go? I don't think so. I'll make sure to get you guys that link. Don't worry. I don't know what's going on right now. Like, it doesn't want to. Yeah, it didn't send it. I think I have to find a shorter one. What in the bumble? Okay, let's do this. But as you guys can see, they're giving out 200,000, right? So let's zoom in. First-time buyers in California Bay Area struggling to save for down payment can apply to receive a loan up to. See, you see the difference. The one we just looked at was a grant. This one is a loan. You could receive a loan up to 200,000 is what California needs, because $1 million over. Do the matrix again. Boop. I just went through the matrix for you guys. I think I'm back. This is the good old live experience. Okay. But as you guys can see, that's a loan, and it's called, let's actually find what the name of that loan is so you guys can. So down payment. Here it is. The Home Access Program. And this is who it's been created by. So, okay, so only first-time home buyers purchasing a primary residence in Alameda, or Contra Costa County can apply. I don't know where either one of those places are. So for all you people moving or looking to live in California, you should know where this is. probably not an area that is very desirable or a place where many people want to move to. It's usually how these things work. They'll give you the free money, but they'll give it to you. They'll give it to places that most people are not moving to, which is insane. But what I'll do here, because I want to be able to get you that link, and I'm going to work on the back end, to get you that link. Give me a break. Give me 1 second. Bank of America. I think if you just Google it, you should be able to find it. Because it's giving me a really long link. So bear with me while I try to. If you do Google it, so yeah, this is what you can do. Sorry, I'm gonna have to give you a little bit of homework right now. You Google this. It's right in the comments. You Google that, then you should be able to find it. So pull up to your local Bank of America and say, "What's up? I'm here to get that money." Oh man. But anywho, there's and when I say the deals and incentives are being offered by new construction, like this is a real thing. In fact, if you are looking to move to Texas, specifically McAllen, I should have grabbed the area, the neighborhood that it was. I came across a video and I was like, boom, this would be perfect to share with you all. Right now, they are offering a 4.75 interest rate for 30 years, up to 8,000 in your closing costs, right? That they'll give you to be able to close. That was one incentive that I saw, and this is the same area, same neighborhood. I don't remember. I don't even remember. I don't even have the builder's name. Sorry about that. I mean, I could definitely, if you want that information, just leave it in the comments or reach out to me and just let me know. Hey, where is that deal specifically? And I'm more than happy to connect you to it based off of what I saw in that video. But the other offer was they're doing 2-1 buy downs. This is only on select properties, select homes. So what that 2-1 buy down looks like is they'll buy down the rate for 2 years. And then after the 2 years are up, then you're going to have your fixed rate. So in this case scenario, the first year you'll have a 2.99 percent interest rate, and then it goes up to 3.99. And then for the duration of the loan, it stays at 4.99. So every single loan that we looked, well, not a loan, sorry, every single interest rate we looked at today, in terms of all the way in the beginning. I mean, if you weren't here in the beginning, you don't have no idea what I'm talking about. So if you stayed to this point and you saw in the beginning, if you're not, if you're on the replay, then you should have came across it. But every single interest rate that we saw today was in the sixes. Nothing that I just mentioned was in the six. This is what I'm stating. If you are really looking to purchase a home, I highly encourage you to look at new construction first before you really cancel and just void all of your choices. Um, Give me 1 second. Yeah, it's still giving me that long link. Unfortunately, I'm not gonna be able to pull it up because it like breaks it up. But this is something I am gonna start doing a little bit more, right? Of course, I'm coming here to share with you exactly what's going on a weekly basis, what's going on in the past real estate. So there wasn't too much that happened this week, so I decided, hey, I'm gonna give you some little bit of educational thing today that you go ahead and take away with. And today's was, of course, mortgages, so you can know how to navigate the mortgage market for yourself. One thing I would definitely say is stick to this because I'm going to start doing this more. Where I'm going to start finding deals so that you guys know and of course, if you let me know what market you're in, I'll find deals specifically in that market. But when I say I'm finding deals, I'm more or less going to be finding incentives, offers that people are offering. I mean, I could maybe even find it where specific properties, right? Hey, this property is offering 10,000 concessions, right? Maybe we can even go take it to that step further. But you guys got to let me know where exactly you guys are looking to purchase in. So I'm not just blindly looking at a map and just dealing with the entire United States here. So if you can let me know, then I could go ahead and have a little bit of a hyper focus area, and I could find your deals. I could find the incentives to be able to share with you. I'm more than likely I'm going to start even sharing the down payment assistance that's involved in specific states and cities, even counties, grants, right? Something that we just went over, right? So there's money out there, and I'm going. My goal is now to find the money for you. So you can't say now at this point in time, I don't got the money. Especially if you have it. Now, if you really don't have it, then I don't. Hey, keep stacking away, keep getting yourself ready. But if you have it and you're just too scared to spend it, that means you just don't want a home. That's it. That is it. But next week, tap in. We're gonna be going over. I don't know. Let's see what happens next week in terms of news. If nothing happens, then we're gonna do something similar to this, where I have a little bit more of an educational thing to bring to the table to you, or maybe we'll bring somebody on and have an interview. I don't know. Got a lot of thoughts going through my mind right now. But with all that being said, y'all have a blessed week. Again, every Wednesday. I'm gonna say Thursday. I don't even know the day of the week. It's been a long week, and the week is not even over. But every Wednesday, I'm here, 7 p.m. on the dot. Catch me here. If I'm not here at 7, just know they got me. No, I'm kidding. But on a serious note, share this with anybody that you know that may be interested or at least looking to get into real estate and just is trying to take their first step and doesn't know where exactly to go. Or maybe someone that is well versed and just needs a little, additional knowledge or whatever the case may be. I'm here to drop all the gems. I'm going to be very raw and brutal with you guys when it comes to this because I want you guys to have this information to be able to take home and apply it and share it with the rest of the fam, all right? So that the fam could then know what to do and they can then start to create what we all like to call generational wealth, right? I just like to call it legacy, right? Just be able to help so that everybody can then, play their role, play their part. But I'm done ranting today. Y'all enjoy the rest of y'all night. Peace out.